Okay, good morning, everyone. I'm going to go ahead and call to order the Retirement System Board of Trustees meeting for Friday, July 10th. Call to order at 8:07 a.m. Carol, did we have any public comment? I may have missed that.
We did not have any public comment.
Okay, for either meeting?
For either meeting.
Perfect, thank you. Two is request that the board approve the agenda for July 10th, 2020. I'm going to go ahead and make a motion to approve that agenda. Is there a second? Second by Brett. Thank you. All in favor? Aye.
Aye.
Any opposed? Everybody go with a thumbs up. We'll just do a thumbs up. That might be easier. Any opposed?
I can't do that because my camera is not working on my phone, and I have to use my phone because of a work meeting that's going on at 9 o'clock.
And Lee, you have to do a roll call because there are people who are just listening. So you need to do a roll call for attendance and for votes.
The training is also going to not be recorded. A lot of times we get that question.
Okay. Okay, so I'm going to go ahead and do a quick, Carrie, you saying roll call approval to
Excuse me.
everything, or you just need to know who's in the meeting?
Excuse me, Lee, can you hear me?
Roll
Yes.
call for all of these meetings.
There's a request to amend the agenda to add Tim Wood's application.
Okay.
So if you guys could approve the amended agenda?
Okay.
Thank you.
Move to approve the amended agenda.
Support. This is Paul.
Okay. Okay. Brett, we have a yes. Myself, we have a yes. Kim?
Yes.
Jessica,
Did you say Kim?
Yes.
Yes, I say yes.
Okay. And Paul said yes, correct?
Yes.
Carol, we have to do this every single time?
Mr. Chairman, if I could suggest, you should
Yes.
just, Mr. Chairman, if I could add that if, all in favor, aye. If there's any no's, then you would take a roll call vote.
Well, Tom, the city commission asked that everybody, that we do the roll calls for these meetings. I mean, if you want to do something different.
That's fine.
There's no official policy, so whatever you find, but every other group's been doing roll calls, just in case somebody's listening on the phone and not watching it.
Okay. Sounds good. Brings us to 4, request that the board consider adjustments, applications for benefits as follows. Applications, we have Constance M. Joswick, formerly of the Police Department, ROPOA bargaining unit, 17 years and 3 months of service credit. Deferred retirement requested, request for a retirement date of May 31, 2020. Eligible based upon terms of a special agreement. Also, in addition, will be the Timothy Wood for a retirement date of July 31st. I'm going to go ahead and make a motion to consider the adjustments applications for benefits as listed. Is there a second?
I'll second.
I'm sorry, can I interrupt? That retirement day is July 29th on his application.
Okay. Sorry, I wasn't able to print it. So I'll make a motion for everything that I said, except the date is July 29th.
Thank you.
And I second.
All in favor? I'm going to say aye.
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 Brett said yes. Paul said yes. Kim?
I said yes.
Anyone opposed? We lost Kyle, but the motion carries. Brings us to investments. I'm going to turn it over to Terry.
Okay. Good morning, everybody.
Good morning.
I'm going to try to share my screen here and see if this works. No, I need whoever this host. I don't know if you can enable screen sharing. If not, I can just speak to the report. Everyone has it, I'm sure. But who is the host, anyways? Do we know?
Carol.
Oh, okay.
I just made you co-host. Should be able to share now.
Okay. Thank you very much. All right. There we go. Okay, hold on here. Hope everyone can see that. Okay, so we were able to get performance numbers for the quarter. We were able to produce those last few days. We don't have a full report in terms of a breakdown of what's going on in the markets and in the portfolio and the attribution and all that. It's a little early yet. I will have that for the next meeting, but we do have complete numbers here. So why don't we go right to them? As you can see, the month was another continued strong month in terms of a rebound, with the portfolio up about 3.3% ahead of its benchmark, which brought the quarter up to a very healthy up 14%, pretty much in line with the benchmark. So strong rebound from all the disaster that took place in the first quarter. Leaves us still slightly down for the year, as you can see, down about a little over 2%, but certainly much better than what the picture looked like just a few months ago. So as I always say, just be prepared for volatility here day to day as the COVID news goes from bad to worse. Right now, we're probably going to see some reaction here at least in the short term. But so far, so good in terms of the rebound. As you can see, what that meant in terms of dollars at the bottom of the page, picked up another almost $5 million in the month. So giving us a gain of a little over almost $18.5 million for the quarter. So back up to $150,374,480. Still, as you know from the above numbers, still down a little bit year to date. Healthy numbers, or healthier numbers on a one year basis. Obviously not right now, looking back over the last 1 year and even 3 and 5 years, not up to the actuarial requirement. Again, given all the damage that happened in the first quarter, but hopefully that trend that we're seeing now continues. If we go to the next page, you can see the breakdowns. You can see that equities continue to be strong for the month, up almost 3.8% for the total equity portfolio, and that put the equity portfolio back up to over 21%, almost 22% for the quarter. Still down for the year, but again, quite a significant rebound. If there's ever a time to prove that market timing doesn't work, this has probably been it. I mean, the sell-off so dramatic and the rebound so dramatic in such a short period of time. It's really been astonishing. As you can see, as we break down the equity numbers, domestic equities led the way, although in the sense that small cap was up 30.6% for the quarter. The large cap was up 20.5%. The non-U.S. portfolio, though, performed very well. Non-U.S. markets did lag the U.S. a little bit, but still healthy returns, as you can see, up just over 20.1% for the international portfolio. The active managers within the non-U.S. equity portfolio did well relative to the benchmarks. As you can see, comfortably ahead for the quarter. and now on a year-to-date basis as well. So they had been lagging in the panic, but they stuck to the guns and had a very strong rebound on both not only an absolute but also a relative basis. Fixed income up a very healthy 7.1%. Continue to see a rebound here, not only for the month, but obviously for the entire quarter. Core fixed income up 4.7%. As rates are lower than they were a few months ago. We're still at very, very low level of interest rates. Managers did a very good job relative to their benchmarks. As you can see, 4.7 versus 2.9 for the benchmark. Emerging market debt is similar story in high yield as well. You can see emerging market debt up 12.9%, so very strong rebound. Had been behind, had been hurt earlier in the year, but started to claw that back as you can see. Still down for the year, but now single digits. High yield bonds right at the benchmark for the quarter, but up an absolute almost 10%, up 9.55%. Core property, still a little bit of a stale number here. We don't have a number for the quarter yet, so that's a final number. So that you'll see that in the next report. Structured credit, as you can see, we know how much damage had occurred early in the year. Up for the month, 12.5%, so digging itself out of the hole. Remember, this is on structured credit fund. It's a 1 month lag in terms of reporting, so it doesn't include actually June numbers yet. So continues to move back, as we thought that sector was very oversold and the fundamentals were much better than what the pricing had reflected. So still has a way to go. That's been the weak spot so far this year, but a very, very strong rebound so far. Private equity, again, just starting to get that money invested, and this is not an updated number at all. There's no entry yet for performance for the quarter. We have to wait another few weeks before we get those numbers. So we'll see that number as well as we go forward. But that's very little activity in that asset class yet. And then that's really it. Other than that, just cash. So overall, a little bit of relief here in terms of what the portfolio did for the quarter. Again, going back up to the total, you can see the strong rebound, and we're gratified that the managers have done well in this environment and relative to their benchmarks. So at this point, no concerns about the quarter, no concerns about the manager lineup, and as I say, we'll have a further drill down at the next meeting when I'll have more detail as to how each manager did within the portfolios. But for now, that's the report, and I'd be happy to answer any questions.
Thank you, Terry. Does anyone have any questions for Terry? I'm going to go ahead and make a motion to receive and file. I'm a yes. Brett?
That's a yes.
Kyle?
Yes.
Kim?
Yes.
Paul?
Yes.
Yes.
Thank you. Brings us to legal. Turn it over to Tom.
Good morning. The first 4 reports are simply just for your information. So if you want to receive and file those, that would be great. So the first 4, Robbins, Geller, receive and file, please.
I'm going to go ahead and make a motion to receive and file.
That supports.
Brett? Kyle?
Yes.
Kim?
Yes.
Paul?
Yes.
All right, thank you. The next 3 are memos from my office. just simply continuation updates on the added flexibility of FOIA, just a remote public meeting reminder once again, and then the CARES update, which is more IRS technical. So unless anyone has any specific questions on those memos, as a group, I would request that they be received and filed, please.
Okay, I'm gonna go ahead and make the motion to receive and file. Rhett?
That supports.
I'm also a yes. Kyle?
Yes.
Kim?
Yes.
Paul?
Yes.
Thank you.
And with that, Mr. Chairman, that concludes my legal report. I hope everybody is well. Thank you.
Thank you. That brings us to O, which is the election to receive the estimated pension payment expires currently on August 31st, 2020. Since inception on January 1st, 2020, 14 employees have submitted retirement applications, of which 5, which is 36%, have requested estimated pension payments. I've got a lot of positive feedback since we started doing this from the members. I will be curious to hear Julie's thoughts as to what the impact has been on the finance department.
All right, thanks. Can you hear me, Lee?
I can.
Okay, thanks. It's the same concerns. So my recommendation is not to continue, especially at the end of the year. Most individuals have exclusion ratio, and the whole tax issue is going to be an issue. So especially anyone retiring the last few months of the year, it's even a bigger concern to continue with the estimated payments.
Okay. You would like to not continue doing it at all, or only for the 4 months out of the year that we had talked about?
Both. My recommendation continues to be the same, not to provide the estimated payments. And, you know, a couple years ago, we went through those reasons. And then I have real super significant concern if we allow for those in the last 3 months of the year. I think that's why the trustees adopted the original to go through August 21st, or excuse me, 31st, the original time it was approved. So.
Yeah. Any discussion on that from anyone else?
Lee, I've also gotten, this is Brett, I've gotten a lot of really good feedback on it, but again, like we originally talked about, I support not doing it the last 3 months if that's creating the big tax accounting problem.
Okay.
I feel like when we originally discussed this, we were all kind of on the same page that there was significant value to employees. Can we balance that out by just making folks aware of the timing pinch, and that they might want to choose dates based on blocking out those last 3 months, as opposed to nixing the program? Would that work, Julie?
Like originally when this came out, it was a recommendation not to do this because, you know, we're touching this 2 to 3 times rather than once. It's more susceptible for errors. These payments go in for life on these individuals. In addition, talking about the the workload in the finance department and how much has been added. And so, you know, when we're doing these things, we have to move quickly and work fast, and in order to accomplish, you know, all the duties that have been on our department and added to our department over the years. So that's my concern. Errors, and touching it 2 to 3 times rather than once. Once I can review it, we can do this carefully. Now we're doing this, you know, again, 2 to 3 times, which again, it's more subject to errors, and that's my biggest concern. So, and if you look, I mean, I'm sorry, the original intent of it was for hardships. And originally, when we discussed this years ago, I believe I brought some documentation on individuals' exit pays, and they're quite significant. That's why I thought it would be okay to continue with, you know, paying when we get the final numbers in, which is, you know, 60 to 90 days after retirement, because of those substantial size exit pays that people are getting, ranging from, you know, $10,000 to $45,000. So, you know, that was basically my position because of the exit pays. Probably, I think on that document, one individual had less than $10,000 in their exit pay.
The final calculation is still only done one time, though, right? The multiple calculations that you're talking about, that's for the estimated pension. So the errors that would be made would be during the estimated pension payment. The final is still going to be, you're still going to do the final one time.
Correct. What we're doing is we're entering into the system, first the estimated, and then we do a retro once we get the final number in, and then we also enter in the new regular, which is different than the estimated and different than the retro, of course. And so touching this so many times into the system and doing these calculations, number one, take a lot more time, and then number two, opportunity for errors. So more opportunities for it. And then, you know, doing it 3 times, you're rushing through it. Rather than one time, you can take that allotted time that you have to do this and be more careful with it. So that's where the concern comes from.
In the 8 months that we did this, have there been anything that has happened where there's been mistakes made, errors made, anything that's been cause for concern?
I don't think so, but the problem is you don't know about these errors sometimes for 10 or 20 years or never. You're paying someone the incorrect amount, or maybe you punched in maybe the exclusion for tax, you know, or something, you punched it incorrectly, and these things sometimes never rear their heads, or further down the road. It's nothing that I would expect that necessarily gets caught immediately. So, and that's the concern. These payments are for people's lives, you know, lifetime. So, you know, that could be 30 years.
But that's the final calculation, right? I mean, that's what I guess maybe I'm not understanding.
Yeah, it would be the final for sure. That would be the most likely. That would be the concern for entering incorrectly, because if it was entered incorrectly on the estimate or the retro, when we're doing the final, we would hopefully catch that. It's coming in a third time now and putting in the final, and again, like I said, we have X amount of time to allocate to this, and now rather than entering someone's data one time with that allocated amount of time. We got to do this 3 times and calculate the retro and then subtract out the estimated payments. So we have a lot more things to do in a defined amount of time, and it's more likely to have errors. That's the concern.
Okay. Does anyone else have anything that they'd like to add to the discussion? I'm going to make a motion to continue as we did during the trial period, to continue paying estimated pensions as long as they meet the criteria that we've outlined in the past. From January through August 31st, so 8 of the 12 months. I'm a yes.
Sports.
Kyle?
Can I ask one question?
Absolutely.
Julie, I should know this. Do we pull an admin fee from the fund? Does the fund help support staffing demands?
No, it does not. Currently, this fiscal year, no.
My hands are made out of glass, Diddy. Chop, 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 chop.
Okay.
I was hoping to, I'm sorry, look at the allocation methodology and possibly alter that, not specifically for this, but this could get adjusted during that process. But the answer is no.
Julie, we
that
hired.
creates a fundamental misunderstanding with me. I thought the pension fund paid for a portion of the admin position.
It pays for 50% of the pension administrators.
No, it's for this fiscal year. It's moved out. It's 100%. Everything is in the finance department in this current fiscal year.
Why did that change?
Because the accountant spends a significant time in the pension area, and I do as well. And one of the objectives in the finance department was to establish a defined contribution committee for everyone in the DC plan. And I knew I couldn't allocate administrative costs there as well. So it was more of a fairness because we get tested on by the auditors on our allocation methodologies, and I would not be able to explain that. So so I took it out, and so now everyone's just me, the accountant that spends probably over half her time, and Lisa are all allocated out of the finance department or in the finance department.
That's so indefinitely from this point going forward. There'll be no allocation out of the pension fund for any administrative support function or position.
Unless I can get to the revamping of our allocation methodology for the general admin spread that we have to the various funds. But the problem again is going to be if I allocate to this trust, I'm gonna need to allocate to the DC committee, and I am gonna have to figure out how I'd be able to do that and pay for it. So I'm not sure yet. Again, I have to be fair in my allocation methodology. I can't gouge one, group and not another. It has to be a fair system.
When did that change?
This fiscal year, July 1st.
You're talking about in the last 9 days?
Yes. Fiscal year 2021.
Okay, does that answer
So
your
I only, yeah, and I only raise it because I don't want to be insensitive to staff demands. I know that, you know, we're putting a lot on folks, and I want to make sure you have the resources necessary to do what we're asking you to do. But I also think there's really great value in this to our employees, you know, who are outgoing. And so I want to find a way that's fair to be able to continue to provide this, Julie, without overburdening you. So, I mean, I'm voting yes on the motion, but I do want Julie to, you know, I'm happy. I want to work with you, Julie, to figure out how we can get you the resources you need, you know, as we continue to ask you to do more and more.
Kim? Kim, do we still have you?
Oh, yeah, I'm still here. Sorry, I have
That's
two
okay.
things going on at the same time. No, for the employees or the soon-to-be former employees, I think it's better that we try and do this. Although, yeah, I just think it's better that we try and do this to continue being able to present it.
Is that a yes then, or?
Yes, that's a yes.
Okay. Paul?
Yes.
Paul is a yes. All yeses. No nos. Let's go ahead and try to set the date for the next meeting.
Hey, Lee, I don't know, did we officially address on the record the amended issue about Tim Wood's estimated pension? I know I brought it up prior to the meeting starting, but I don't know if we were on record yet.
I don't know that it needs to be addressed actually, because it doesn't meet the criteria.
Right.
If you'd like something on the record, then I can.
No, I just want, you know, it was brought up as a possible discussion point, and I did talk to Tim, and he understands and accepts that he does not qualify. So I don't think we need to say anything further about it.
Okay. Sounds good. Let's try to set the date for the next meeting. We've got Brian is on here as well for those of you that can't see it. We're looking at a date of August 3rd. It's a Monday.
I'm going to have the same issue in terms of not being able to have numbers for you that early after the end of the month.
Okay. The following Monday, August 10th.
That looks good.
Works.
Yep.
That works for me.
Julie, Paul.
We have a commission meeting.
I'm showing one on my calendar.
Yes, Commissioner Gibbs, Commissioner Dubuck, and Paul Brake, there is a city commission meeting that evening.
Okay, I didn't have that in there, and that's not a good day for me then.
And Lee, if I can help you out, August 11th through August 19th, we can't schedule any meetings currently because the technology is being moved for the new city hall. The week prior, if the reports are ready, Thursday is available, August 6th, and Friday, August 7th is available.
Jerry, would that work, or is that still too
I think we should have it for the 7th.
Okay. Friday, August 7th.
Okay, thank you.
Works.
Everyone's good? Friday, August 7th, 8 a.m.?
Yes.
Okay. The date is set.
Thank you very much. Everyone stay safe, and I'll drop off.
Sounds good. Thank you, everyone. I'm going to go ahead and I'm going to make a motion to adjourn. I'm a yes. Brett?
Yep, Brett.
Kyle?
Yes.
Kim?
Yes, thank you.
Paul?
Yes.
Okay, meeting is adjourned. It's 8:42, Lisa.
Thank you all. Take care.
Thank you. I'm going to go ahead and call to order the Retiree Healthcare Investment Board meeting for Friday, July 10th, 2020. Call to order at 8:43 a.m. One is public comment, which I've been told that there is none. Two is request that the board approve the agenda for July 10th, 2020. I'm going to go ahead and make the motion. I am a yes. Brett?
Yes.
Kyle?
Yes.
Kim?
Yes,
Paul?
Yes.
Three is request that the board approve the minutes for June 5th, 2020. I'm going to make the motion. I am a yes. Brett?
Yes.
Kyle?
Yes.
Kim?
yes.
Paul?
Yes.
Thank you. That brings us to investments. I'm going to turn it over to Brian Green.
Awesome. Good morning, everybody. Carol, can I do screen shares to bring up report?
All set.
All right. So we just have brief numbers as of June 30. And Terry walked through a lot from a capital market standpoint, so I won't go too deep into that. A couple things just to bear in mind. One thing we are continuing to see this year, despite a great recovery in the third quarter, you're still, unless you are heavily invested in tech stocks, more growth-oriented names, you're still in negative territory. So you do still have some ground to recover on things. A little bit mixed so far here in July, but a couple really interesting things that we're seeing. If you look from a style standpoint, so talking about value stocks versus growth stocks, the trend has been and continues to be growth outperforming value across the board. You're talking 20, 25, almost 30% differences in performance so far this year. As an example, if you're in large cap growth stocks, you're actually in positive territory. That's obviously been led by a lot of technology names, Apple, Amazon, Google, Microsoft, up almost 10% for the year. But value-oriented names that are going to be more, bank stocks, consumer staples, are still in double-digit negative territory, down almost 16%. But as a whole, the S&P, for example, is down just over 3% year-to-date. But mid-cap and small-cap stocks still down, 9 to 13, and the same measure really from an international equity standpoint. I thought this was interesting really from a visual standpoint. So this is a graph we've started to include just to show, the value of the assets and how they move over time. And obviously you go back to the start with the funding of the trust, with the bond issuance. The increase here was the consolidation of those merged retiree healthcare assets in. And then the decline you see here, the gradual decline of the gray line is just the payment of benefits for healthcare premiums over the years. But the blue line, as it jumps around, is obviously just the market value. And it's amazing to see, the rally into the end of 18, the decline in the fourth quarter of 18, the recovery over the course of 2019, the damage that was done in the first quarter of 2020, and then the recovery here. But you see we ended, just over 127.5, almost $127.6 million current value. And then return over that time period is 4%. So this is always kind of that test back of, issuing the bonds and working the arbitrage to invest at a higher rate of return than what we're paying from a debt service standpoint. This is the test back on the overall success of the healthcare trust. So where are we on a quarter and year-to-date basis? So for the month, we were up about 1.2%, lagged the policy index that was up 2, really because of some underperformance, primarily from 2 of the international equity managers, just positioned a little more conservatively, particularly out of First Eagle. The story is really the recovery for the quarter, up 12.8, almost 12.9%. But obviously that recovery we saw in the second quarter wasn't enough yet to bring year-to-date numbers back into positive territory. Still down about 4.8% for the year. We're still working through portfolios to get a better understanding of where performance came from. Saw a little bit of underperformance for the month, obviously out of Sizert and Ancora. Again, unique value bias to the portfolios is hurt. As I'd mentioned, the international managers, First Eagle and the Virtus Bontable portfolio both lagged a little bit. First Eagle really because of their cash and gold positioning in the portfolio. Bontable, we're going to dig in a little more and just have a better understanding, but that's one that's actually done quite well in the long run. And then from a fixed income standpoint, this has obviously been positive news across the board. This has been the biggest driver of returns so far this year because it's been the only part of the portfolio in positive territory. You see the overall fixed income portfolio up about 4% for the year. And then the piece we're still waiting on is obviously the real estate allocation. So early in the quarter, we're probably a week or two away from seeing numbers come in for a lot of these strategies. We're hearing some whisper numbers out of managers. You know, I will call and tell you about this, but I won't email it to you. Expecting real estate portfolios to be down around 1 or 2%. And that's kind of been expected. Remember, real estate is a lagging indicator. So real estate was still positive in the first quarter, but the impact of all the shutdown and everything from a COVID standpoint is obviously going to be reflected in second quarter appraisals that are coming in. So we're going to probably have those numbers in the next week or so, but we'll have that for the August meeting as part of the overall report and dig a little bit deeper. So outside of that, right, it's positive news across the board, continuing to recover those losses from the first quarter. But that's the extent of my prepared comments. I'm happy to answer any questions that you may have.
Okay, sounds good. Thank you. Does anyone have any questions or comments for Brian? I'm going to make a motion to receive and file. I'm a yes. Brett?
Yes.
Kyle?
Yes.
Tim?
Yes, but I don't think you got a second, did you?
Brett seconds.
Oh, okay. Thanks. Sorry.
Paul?
Yes.
That brings us to legal.
Thank you very much, Mr. Chairman. This is two for one day. You can make one motion and get two things accomplished by receiving and file the two updates that were briefly addressed, FOIA and remote meetings. If you have any questions, now's a chance. Otherwise, recommendation would be to receive and file as presented.
Sounds good. Thank you. Does anyone have any questions or concerns for Tom? I'm going to go ahead and make the motion to receive and file.
Supports.
Brett supports. I'm a yes. Brett?
Yes.
Kyle?
Yes.
Tim?
And can you put them in chat?
Kim?
Yes.
Paul?
Yes.
Thank you. Julie, did you have anything under other?
No, thank you.
All right, thank you. The date of the next meeting has been set as Friday, August 7th, approximately 8:30. I'm going to make a motion to adjourn.
Seconds.
Second by Brett. I'm a yes. Brett?
Yes.
Kyle?
Yes.
Kim?
Yes.
Paul?
Yes.
Okay, thank you, everyone. Enjoy your month.
Thanks. Have a good day, guys.
All right.
Have a great,
Thank you.
Have a good
have a
weekend.
great weekend.